All right. Hope you're doing amazing, learning, progressing, and loving every single video and moment within 1022 mentorship. I know that I'm having a great time educating and sharing my knowledge with everybody. So in this one, we're going to be talking about the philosophies of trading and no charting, no nothing, straight philosophies about the markets. And come back to these. Definitely take notes. Have a notepad and a pen ready so that you can take notes on these concepts because they are far overlooked. As a beginner trader, you are going to go through trials and tribulations. You're going to question what you're doing. And these philosophies will help you and guide you in the right direction, in the good direction, the best way possible to assess your trading and go about it every single day. So let's waste no time. Share my screen, pen and paper out, and let's get right into it. So, number one, trading is a brand new language that takes time, energy, and money to master. When you learn Spanish, French, German, you have to learn the basics. You have to learn the very first word, how to say certain phrases and sentences. And when you're learning a new language, it takes energy, it takes money, and it takes time. Trading is a new language. Economics, financial literacy, these things are not taught to us as we grow up. Therefore, it has to be taken with a grain of salt because it's new. You're not going to understand it right away. And some people who don't like not knowing what's going on are going to struggle with this one philosophy because it feels good to know what's going on. And when you don't know what's going on, it sucks. And so be patient with yourself because it takes time to learn the language of the markets. And so that's number one, philosophy number one. Philosophy number two is trading as your only source of income is dangerous. When you trade, you make money. When you trade, you lose money. You cannot solely rely on trading as your source of income. You must have other sources such as a job. Maybe you have a business. Maybe you have crypto. Maybe you do drop shipping or e-com or SEO or marketing or social media content, whatever that may be for you. Do not rely solely on trading as one source of income. It is dangerous. It's philosophy number two. Philosophy number three. You should not quit your full-time job to trade unless you have 12 months worth of expenses saved up. Realistically, you should have a job until you're making 10 grand a day. When you're making 10 grand a day, then you can quit your job. Personally, for me, I still work. I still work another job outside of this at this current moment. Of course, maybe down the line when you're watching this, you may not, I may not be working a job anymore, but you still may be working a job. So do not quit your full-time job to just trade. Like that is not smart. That is not intelligent. So that's philosophy number three. Number four, the large majority of traders lose. This is not an opinion. This is a fact. And the reason why most traders lose in trading is because they give up too soon. I look at trading as a full-time study, and you'll study the rest of your life. There's nothing that cannot be learned. There's so much material. There's so much information out there that it's almost nearly impossible to not learn everything. Like, it's impossible to learn everything. I'm sorry. And what a lot of people do is they'll trade for a year, 6 months, 2 years, and they won't make money and they'll quit and they'll say this doesn't work. And that's everything in life. When you quit, you lose. You can lose a year's worth of trades, but you still are not a loser because you're still going, you're still learning, you're still in your process. But once you quit, once you give it up, you're done. And that's why majority of traders lose in trading, is they don't give themselves enough time to reach that goal. And most of the time you're 3 inches from gold, from hitting that gold with your axe, and you just give up. So that's philosophy number 4. Okay, this is a fact. Trading is to be treated as a vehicle that allows you to grow and compound your capital over time. You start with $100, the next day you're at 120, the next day you're at 124, 42, the next day you're at 168, the next day you're at 187. So you're compounding your capital, and trading is that vehicle to help you grow your money. If you get off your job, your 9 to 5, and you have $200 left over that you're not going to spend, and you invest it in the market, and you start compounding that and growing that investment every single day, every single week, every single month, it will grow and compound over time. That is what trading is. Number 6, trading is not for the impatient and the undisciplined. If you do not wake up in the morning and make your bed, brush your teeth, go to the gym, read, work out, stay healthy, small disciplines like that, you will not be a great trader. If you're impatient, if you have to eat microwavable food, it's called the microwave mindset. Not good food doesn't get microwaved, right? Like, we know that great food takes time to cook, prep. It takes creative time to put into trading and cooking. Same thing here. You cannot be impatient. You cannot have a microwave mindset. You are not going to make $1,000 your first trade. Prove me wrong. Prove me wrong. It's just how the game is played. Okay? That's philosophy number 6. Philosophy number 7. Professional traders look at an account growth in terms of percentages, not dollar amounts. When I grow my account, if I have $25,000 and I make $500, I did not make $500. I made 2%. I hit my 2% growth goal of $25,000. I grew my account 2%. Professionals look at account growth in percentages, not dollar amounts. Philosophy number 7. Number 8, professional trading is systematic and repetitive, which in turn can make it boring. It's a boring subject, guys. It is repetitive. You look for the same setup, the same trade, the same Fibonacci retracement. You do the same lot size over and over and over and over, the same stop loss, the same entry, the same take profit over and over and over again. That is what trading is. That is how the game is played. You cannot change your trading every single day. It doesn't work. I've tried it. I've done it. I lost because it's systematic and repetitive. Repetition of the game will make you a winner. Number 8. Number 9, learning to manage emotions better starts with following proper risk management. If you have $1,000 and you're in drawdown $300, you're crapping your pants. Why? Because it's way too much money. You're risking way too much for your account size. If you had 50 grand and you were down 300, different story. 25 grand, 300, different story. Now, if you had $1,000 and you were only down $30, your emotions are much better. You're calm. It's no big deal. You can make that back the next trade, right? So when you have proper risk, your emotions are better. You manage them better. You don't make impulsive decisions. You don't close the trade early. You don't over leverage. These are so important. These are so crucial to becoming a good trader. Following proper risk management. Number 9. Number 10, your equity curve is a mirror and reflection of your habits, thoughts, and feelings. Wow, this is a big one. If your equity curve is going upward consistently, day after day, week after week, you have strong emotions. You're not impacted by the market and what it's doing. Your habits are good. They're consistent with your trading behavior, and your habits really start with your day-to-day. From the moment you wake up to the moment you go to bed, what are you doing? Are you going out and drinking? Are you eating bad food? You know, it's okay to have a drink and you know, maybe even if you smoke weed. Like, I'm not condoning those things, but it's okay to do those things in moderation. But if your habits consistently reflect that, then your equity curve is gonna be negative. How about your thoughts? Negative thoughts. Oh, my trade's not going to win. Oh, this is a bad trade. Oh, I'm risking too much. What am I doing trading? Bad thoughts. Negative thoughts. Thoughts lead to what? Feelings. Your thoughts lead to your feelings. Your feelings lead to your what? Your actions and your emotions. So Once you have bad thoughts, now you feel bad. Oh my God, I'm never going to be a good trader. Like you do not feel good after you have those thoughts. So your equity curve is a mirror and reflection of your habits, thoughts, and feelings. Write that down. That was number 10. Number 11, work smart, not hard. Know your setups, know your rules. Trading is not hard. Trading is simple. It is not easy, but it is simple. When you work smart and you pick good trade setups, right? When you're picking through fruit, you're at the market, you're picking through fruit. You're not going to pick the bad fruit. You're going to pick the good fruit. You got to pick the good setups, guys. You got to know your rules. You got to know how much you're going to risk, what kind of entry you have, what's your take profit, what's your stop loss. All of these things are super, super important. It's number 11. Number 12, discipline behind the plan over the plan itself. If you create a trade plan and it's $250 a day, you're risking $100, you're going to only trade USD JPY, Euro USD, whatever. And, you write out your plan, but your plan doesn't mean anything if there's no discipline behind your plan. If you're not actually doing what you wrote down in your plan, then what's the point of making a plan? Knowledge is power, they say. They say knowledge is power. No. Applied knowledge is power. Applied knowledge is power. That was number 12. Number 13, being obsessed with making money is probably why you aren't attracting money. This one's a little tougher to understand because we're obsessed with making money. We want to make money. But sometimes that obsession leads to impulsive decision-making, and you're chasing the money instead of attracting the money. When you have a great setup, when you're trading, even when I send my trade setups out, I'm super patient with them. I let them play out. I do not chase the money. I attract the money. I track the money. Number 13. 14, high reward trades come unexpectedly. When you are placing trades and all of a sudden you catch a beautiful setup, it happens unexpectedly. You continue to do what you do every single day, and eventually you're going to hit one of those high reward trades and you're just in deep profit because you were patient, you stayed consistent, you stayed disciplined with your plan, and it will come, but they come unexpectedly. So stay humble. Number 14. 15, short-term results are irrelevant. Irrelevant. This is a long-term game. This is a game of longevity, not trying to make $100,000 in 2 weeks. It's not how it works. Guys, some of the best traders I know have been trading for 8+ years. That is not short term. That is like they were not millionaires overnight. They were not millionaires in a year, 2 years, 3 years. They took the time to learn. Massive. That's so crucial. Short-time results are irrelevant. Because if you have a winning week and you're up $1,000, but then the next week you lose 700, that is short-term results. Being right. Number 16, being right doesn't need to be the main focus. Being right does not need to be the main focus. The main focus is to make money, not be right in the markets. Short and sweet. Love it. Number 17, you don't control the market. The market doesn't care about your emotions. It doesn't care that you want to have a winning trade or make money or make 10 grand a month or 10 grand a day. The market doesn't care about that. You do not control that. So when you place a buy or a sell and, it's not going your way and you want it to, that's too bad. You don't control anything. All you control is your trade setup, your emotions, your risk management, your discipline, how often you show up, your habits, your attitude behind trading. Those are what you control. You do not control the market. Number 18, student to the game for life. We talked about that just a minute ago. Trading, you will learn it forever. You will continue to learn. There will continue to be more things. Cryptocurrency will continue to be a thing that you have to learn about. It will be in your life, no matter if you want it to or not. It's going to be. The game for life is being a student. You are never done learning, ever. I still learn every single day. Every single day. Number 19. Delayed gratification is crucial. This one's huge. Everyone's process is different. Everyone's path is different. I know some people that did become successful in 6 months, but they quit. They made so much money, they just quit. The gratification, they had it early on, and then they didn't need it anymore. The delayed gratification is being able to not have to have it right now. That is what delayed gratification is. You don't need it now. You can get it later. It's coming. You are attracting it, but you have to be patient. So that's number 19, delayed gratification. Number 20, your attitude can slow down or accelerate your success. Attitude is everything. Attitude is everything. What's your attitude about it? You know, do you show up ready to go, locked and loaded? Are you at the gym positive, killing your workout? This is great. Or are you at the gym saying, man, this workout sucks. Like, I don't feel the best. I'm not going to do well. I'm scared. I'm nervous. I can't do this. If that's your attitude, there need to be some changes. Big changes. If you know too that your attitude could be better, if you know that you're not always optimistic, realism and optimism, I get it. You might have different opinions about that. However, if you say you're going to lose a trade, you're going to lose a trade. That's just an attitude thing, you know? But if you are positive and you say, I'm going to win this trade, and then you lose the trade, but you maintain that same attitude, your attitude will outcompete your negative results. Number 21, losses are part of the business in trading. Most businesses that start lose the first 3 years and don't even break even. Look at some of the biggest companies in the world, Amazon, Apple, blah, 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 right? Google, whatever. They weren't making any money their first 5-6 years of their business. None. But they kept going. They were losing and losing and losing until they won. Guys, you're going to lose money. It's part of the game. You're going to lose trades. That's how it is. But you cannot let that get you down. You got to keep going because losses are part of trading, just like any business. Last but not least, the market does not care about your emotions. Ladies and gentlemen, you are in a trade and you're over leveraged and you're hoping the market goes your way and it doesn't. It don't care about your emotions whatsoever. You don't control the market and it does not care about your emotions. It really doesn't. Like, you could be sad. You could lose all your... Think about this. You blow your account, which I've done multiple times. I've lost thousands of dollars in this market. You blow your account and you're sad. You're depressed. You are just... You're done. The market don't care. It doesn't care that you're sad. If you win a trade and you're happy about winning a trade, the market doesn't care that you're happy. It doesn't. It doesn't care. Beautiful philosophies. I hope every single one of you took every one of these down, post it in front of you. Philosophies of trading. Beautiful, lovely, awesome, amazing. Guys, I hope you're enjoying the intermediate series. We got our last video coming up after this one. Short, sweet, to the point. Philosophies of trading. Keep up the good work. Stay grateful, stay humble, and let's go chase the bag.